Today we're taking a look at Ardor, ARDR, cryptocurrency analysis and prediction. Welcome back to Crypto Cash. This is your one-stop shop for cryptocurrency analysis. Before we go ahead and take a look at Ardor, please just consider subscribing to get notified as soon as these videos are released. This gives you a head start so you can effectively plan out your trades and make an informed decision. I have years of trading experience, and my goal is to share my knowledge with the world. Thank you so much for tuning in. I always start off with the fundamentals and then dive deeper into the technical data. I also provide you with action plans for the future so you know what I would do in each scenario as a day trader and a swing trader. So be sure to stick around to the end for my recommendations. Also note that this is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. Ardor is a platform that offers blockchain as a service to businesses. Unlike Bitcoin, which is a cryptocurrency and a worldwide payment system, Ardor is a multi-chain blockchain platform with a parent-child architecture. The security of the whole network is provided by the parent Ardor chain, while the interoperable chain has all the functionality. Today's high is 52 cents. Today's low was 46 cents. It's an overall daily change of 5%. The 52-week high is 79 cents, and the 52-week low is 2 cents in total. Now, as you very well know, the price changed dramatically approximately 2 days ago. The price spiked over 100% in less than 12 hours, and it came to play. However, now it's completely lackluster. Strictly consolidation, and we never truly know exactly what's going to happen next. That's obviously why we're here today. However, the past 24 hours has been just significant consolidation with very low volume. The resistance is at 52 cents. This was a support level recently. Current support level is at 48 cents. And now for the technical analysis. For my day traders out there, looking at the 15-minute chart, both the 50 and the 100-day moving averages are locked together. This usually creates a strong support or resistance line, so be mindful of that. These indicators are not ideal to use right now as they're hovering right in the middle of the price. This does tend to happen when there is low volume and low volatility. The price action is very low. Now, what's relevant in this scenario is the RSI and possibly the VWAP. The RSI is under 40, which is a great consideration for an entry point. However, the VWAP would normally be helpful, but unfortunately with the volume being where it's at, it's not very effective. Now, until the price and volume does change, this would not be an ideal day trading scenario. Just overall, I can confidently say that day trading this would be kind of frustrating, to say the least. But here's what I would do if I were planning to day trade, right? Because it can still be done. I would start by remaining patient. First things first, wait for a good entry. And again, be patient. Get something to drink. Take it easy, relax, and wait for a good entry point. It may not come right away. Now, if the volume increases, though, what I would do is I would use the VWAP to identify the average price and to see how it's reacting. If it stays above the VWAP for at least two 15-minute green bars, I would consider taking maybe a half position, somewhere around 50%. I would also take a closer look at the moving average converging divergence, the MACD of course, to identify the momentum and to see if it's trending upwards. It doesn't always have to be, but it certainly helps when it does. It just kind of confirms, letting you know you're in the right direction essentially. Lastly, I would actually also look at the RSI to see if it's under 70, because this would be a strong indication of a buy signal, at least with all these things together. And as usual, I always like to take my profits whenever possible, so I would essentially just be averaging up my profits by selling small percentages of my total. This ensures I'm always profitable if the price does end up kind of reversing on you. For my swing traders out there, taking a look at the 4-hour chart, you can see the moving averages don't really matter much at this point. However, they might become relevant in the next couple of trading days, so just be mindful of how the price reacts to the 50-day moving average. Also, bear in mind the momentum of the MACD. It appears it hasn't reached its peak yet. Okay, so it's not quite to the bottom. You may want to wait a few more 4-hour bars to essentially see what happens. Also, bear in mind the RSI is approximately 45. This is a positive technical sign to consider a long position. However, this doesn't mean that you want to take a position yet. You always want at least 2 indicators before making an entry. And by entry, I'm referring to 25%, maybe 50% at best. Never go all in on a situation like this, especially when there's a lot of uncertainty in market. With low volume comes great risk. You must be careful when the price action is stale. Now, even though breakout is very likely in situations like this, the margin for error is also that much greater. Okay, so just please, please, please be aware of that. In this situation as a swing trader, I would consider a couple of options. First, I would make sure the RSI is under 70. I say 70 because I need more than just the RSI to take a position. I would also make sure the MACD has indicated it is shifting momentum from bearish to bullish. This isn't always 100% with low volume, but it does help. I would also shorten the time frame down to the 1 or 5 minute chart to identify what is actually happening with the price action. I know this seems crazy to use such a small time frame, but it really helps you understand what's going on specifically more so at a cellular level instead of a bird's eye view. Again, both have their advantages, but it's important to shift between the two as a swing trader. Once the price jumps above the VWAP and 100-day moving average, what I would do is take a small position and add to my position as the price increases. Again, never go all in at first. I would also make certain that I reverse this action when exiting my position, right? So as you go in, take small positions. As you leave out, sell small positions as well. Right? Don't just wait until you get to a point and sell it all. That can happen sometimes, but you will get burned eventually. Now, if I was feeling bearish, I would wait until after 15 minutes to see if it is still respecting the resistance level of 0.52. I would then add to my position or open a short-term trade as close to the resistance level as possible. I'd make sure the RSI is not oversold and also pay attention to the MACD to effectively understand the momentum. But when I short, I always sell in very small portions. Like I'm usually only 20% at a time. And to me, that always just ensures that I am profitable. You'll hear this a lot in this channel. Don't go all in unless you're hodling and holding on for dear life. There's really no point and no purpose in it. I cannot stress this enough. Make sure you set a target, and if you do not hit your target, get out and take your profit. The key to profitable trading is to survive to trade another day. If you found benefit from this content, please like and subscribe. And please let me know what your thoughts are and if there's anything else I could do to improve your trading experience. Feel free to contact me on Telegram, IG, or Twitter. Links in the description below. Also, comment below and let me know what positions you're holding and if there's anything else you want for me to cover. Is there any currency that you would like for me to analyze? Comment below so we can all learn together and grow together by building your wealth. Thanks for watching. We'll see you again soon.